I think it is in trouble. I've thought so for about 6 weeks now. We think that there's probably another leg down from here. And if it can hold the low levels of 2018, then you could move higher. But right now, we just see a very messy and unsatisfying market.
And when you look beneath the surface or beneath the hood of the S&P 500, a lot of stocks are already in bear market territory.
That's right. And the reason you're feeling it so much on the index level is because the large cap tech names, which drove the market performance and became 25% of the index just in August alone, with those stocks dropping, you need the other 75% to carry it. And it's a math problem. It's very hard to get that kind of performance to move the index up.
I was never very good at math problems, and apparently the market isn't either. Michael Aroni, what do you think? Does this market still have some staying power, or are you concerned about it, or qualifiedly so?
Well, the fat lady is certainly not singing just yet to signal the end of this bull market. But Tyler, if you do listen in the background, you can hear her warming up. And investors are pricing in kind of the worst case scenario for U.S.-China trade relations, for fiscal policy stimulus wearing off, Fed rate hikes, and slowing corporate profits, particularly among high-flying tech stocks. So if we get any relief in those four areas, you could see the market rebound with a bit of a relief rally headed into next year.
What's your sense of how much the market has, in fact, priced in? You said the market is pricing in. It does look like, with each leg lower, that it is a process as opposed to something that's already happened, Michael. So at what stage are we at? I mean, at what stage do you say, you know what, the market is trading at fair value right now?
Well, I think what's happened is that earnings per share growth is still going to be very solid. Let's just look going to have 9% earnings per share growth. Admittedly, nowhere near the levels we're currently at, but that's still a very healthy number with a market multiple of around 15, maybe a little more than 15. And all the hubbub around higher rates and greater levels of inflation seems to be just more noise than anything else. Rates have been backing down some. Rate of inflation seems to be plateauing. To me, the big risk is if the Fed continues to go too far, too fast, I think that could have problems. We're seeing that, for example, in the NAHB number today in terms of housing, construction, and some of those numbers. So I think the risk there is that the Fed perhaps goes too far, too fast.
Alicia, in the survey we cited at the top of the segment, we mentioned that people think healthcare is a place to go. Do you agree with that? And what do you think of tech shares?
So I do agree with the healthcare piece, but I'd break it apart. I like the services, I like the hospitals, the HMOs, and the Medicaid HMOs, in part because of the election results. Because with the Democratic Congress, the ACA is fine, it's not going to be repealed, and you're going to have some states that had Republican governors flip Democrat, and they're going to expand Medicaid. So for that reason, I like the services. I don't like biotech or pharmaceuticals right here. I think there's a noise problem, and it's the price control issue. So you have the administration interested in price control, and you have a Democratic
House that might well go there.
There's a deal there, and I do think that with the Republican Senate, whatever comes out won't be as big a bite as it would if Congress had flipped totally to the Democratic side, but there's a deal to be had, and I think the headlines are going to be rough.
After last night, I know Jay Pelkett.